Yo, what is up, everyone? My name is Dom, and we're here to talk about unusual options activity. Alright, disclaimer. This video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must inform their own due diligence and realize all investments carry risk. There's no guarantee of profit. Okay, so first one I want to talk about, and this one's pretty interesting here, ARK. Now, they're coming in and they're buying some extremely short-term calls here. This is the deep end of the pool. These trades are not for everybody here, but if these trades work, you can get about a 1 to 2% gain in the stock, and you can get about a 50 to 100% return. So the risk reward is really there, in my opinion, considering you're paying only about 70 cents here per share to control 100 shares. So you're paying $78 to control 100 shares for only 2-3 days, have you? Or you can go out and buy the stock for $8,400 for 100 shares. Obviously paying 1-to-1 there. So in my opinion, if you really know what you're doing and you're willing to take the risk, the short-term options, the risk reward is there for me, because you can get a 200-300% return pretty easily if the stock makes a 3-4% move. And obviously the people coming in and buying these contracts are smart money. They're institutional traders. They know what they're doing. They're not just placing these trades, you know, with not a lot of knowledge or not a good reasoning behind it. So there's about 12,000 contracts traded here. Not all of this volume here is institutional traders coming in and buying, but we did see some nice call orders here. We could tell most of them are opening orders because of how small this open interest is here. The order size is greater than the open interest, so therefore we know, and if they're buys, therefore we know they're buy to open orders, and we're not getting confused if somebody's buying to open or buying to close, short calls that they were short. So I like this trade here. I'm not in this one. I saw a lot of other high multiple Cathie Wood speculative tech stocks, whatever you want to call them, hitting in today's session. If you take a look at the chart here, ARK has just been absolutely slaughtered lately. It had a huge run up from the pandemic. Pre-pandemic high was about 60. This thing ran up to about 160. So from the pre-pandemic low, this ETF was up like 500%, it seems, from just quick calculation off the top of my head. You can say, yeah, it's probably going to take a breather, which it has, about down 50%, 160 down to about 80, exactly a 50% retracement here. You can see this candle hit at about 80. I believe Fibonacci is 50% retracement is a Fibonacci sequence number. I'm not 100% sure. I think 50% is just thrown in there. But, however, that is pretty I don't think that's really a coincidence to see it bounce off of exactly a 50% drawdown. However, I'm not in these calls. I'm going to take a look at this one tomorrow morning. This stock really fell off a cliff towards the end. This ETF fell off a cliff towards the end of the day, closed down about $2.50. So if we got in those calls when they were jumping in, we would have a loss. That's why it's always nice, in my opinion, to kind of wait and see if you can get a pullback and get in at a cheaper price they get in, because then you could sell it, turn around and sell it at the price they got in if the ETF or stock goes up, and you make a nice profit and you're getting in lower than they did, getting out when they did. Sometimes that trade works for me. Other times you can let it ride and you can actually get a way better percent gain than these smart institutional traders are. So I always try to wait, see if I can get in at a better price. Usually with these shorter term ones here, they could just be day trades. So if I don't get in it on the same day, if they're getting like 1, 2, 3, 4, 5 day expiration, maybe I'll take a pass, but it's definitely something to keep an eye on. Definitely might be a good time to step in here and buy this ETF if you guys have been looking for it. If you guys have been looking for an opportunity to get in. Just my thoughts. Okay, next trade I want to talk about is Lucid. Now, there was some rampant call buying. There has been the last couple days, and the stock has made a nice move up here. We did get in at a lower price than where the ETF or the stock closed, but we have a loss. Unfortunately, due to probably some implied volatility dynamics. So when you're going out buying the straight call, you're very susceptible to implied volatility swings, and you could actually lose money If the stock moves higher, you buy calls, the stock moves higher. If the implied volatility drops, called implied volatility crush, which I talk about on this channel quite a bit, you can actually lose money, which is pretty frustrating. That's kind of what we're experiencing right now. It's actually really frustrating, but that's what happens. That's the kind of the risk you take, leaving yourself susceptible to the fluctuations in implied volatility when you are going out and buying a straight call. That's why I say sometimes I buy the at the money call, sell the out of the money call here. I wanted to take a little bit of a higher risk, higher reward here, going for these 50 calls here with the stock at about 45. So this is an extremely low probability trade here. This is a quick in and out trade. I would have made a day trade, but it did not work out that way. I'm willing to hold these calls overnight. You can see all this volume here, 70,000 contracts traded, 35,000 contracts traded. I bet there was some institutional traders coming in here, but most of this was retail flow. So a lot of these people are day trading. You'll probably see in the morning that the open interest here, not a lot of this volume is going to transfer to the open interest because a lot of these people are day trading. However, I'm fine holding this stock overnight. I actually kind of like technically where this is at. I think we could, where the stock is at, I think we could even play it up to this 55 level here. This is an extremely overvalued stock. I would never buy the stock. I think EVs are kind of in a little bit of a bubble here. Nothing like 1999. From my opinion, I did not trade or live during that. Well, I lived during that time period, but I wasn't trading. But this stock has like a $50 billion market cap. They're going to make like 100 or 300 cars like that. Don't quote me on that. Something like that they're going to make, which just is kind of a ridiculous, is a ridiculous valuation in my opinion. I would trade the options, but I would never trade the stock. I like where this one is at technically here because it kind of looks like we tested the 50-day intraday and bounced off of it, and we were able to just zoom right through that 50-day. I think we could have a move towards 55, although I would be long gone by then, especially because these options expire in a couple days here. So if I can get, you know, especially a few dollar move in this one, we hopefully will have a nice gain in the options, 100%, 200%, and I will take the money and run on to the next trade. So thanks for everyone who's been subscribing. Make sure to subscribe and like the video so I know to keep making more videos like this. Make sure to check me out on Twitter at OptionGuru100. I post some trades over there, post some stuff over there as well, so check that out. Make sure to subscribe, like. We'll see you in the next one.